Good morning, everybody. How you doing today? It's Thursday, June the 24th. Oh my gosh! Welcome to Stock Markets with Bruce. Your Uncle Bruce here. Nice to see you all here this morning. Welcome to the channel and the show where we try to cover the stock markets in plain English. It's as simple as that. Do you think the summer doldrums in the stock market will be different from things reopening? I don't know if there's going to be a summer doldrum. We have been on a summer doldrum since last year when everything shut down last March. It's been a year and 3 months of doldrums. The market took its dump back in March of last year, then not slowly, but fairly quickly recovered it within 2 to 3 months, got it all back by June last year, and has been riding it ever since. Last summer, there was no doldrums. The summer was just a power up. We're going to do that this year because in the past, people used to work the 50 weeks a year, get their 2 week summer holiday and take off, and brokers took their 2 weeks off, and it would all kind of get quiet and drift down and not much going on. That's not the case anymore. People are holding their brokerage accounts with this. They're on the road to go to Nantucket or go to Michigan or go to cottage country somewhere, and they're taking this with them. This is now with them all the time. They don't talk to a stockbroker anymore. You don't call your broker to place orders or contracts. There's no desk traders to be yelled at by the stockbroker anymore. It's all done by yourself. There will be no summer doldrums. There's none of that. And the market has gone global. This used to be a kind of a country club crowd kind of existence, this stock market. In the 60s and the 70s and the 80s, I bet you 95% of the people who played the stock market were of a upper middle class or higher designation. And even then, only 10% of those folks had anything to do with stocks. 90% didn't know a thing about it, or left it to a mutual fund, maybe, if that. There were virtually no women in the business per se. It was a man's business. So was insurance, and so was the automobile business, and so everything was a man's world except for where the gals were secretaries and they had the glass ceiling and all the crap that the women went through. Unbelievable. It was a man's world, and guys went on holidays with their kids and wives and took off, and the market got quiet in the summertime. Not the case anymore. This market is now democratic. This market now covers men and women. This market covers people who are lower middle class. There are people who aren't even in the middle class at all who are in the market. People now with $50 can be in this market. Hundreds of millions of people with $50 are in this market. The upper middle class and higher, half of them are in the market, if not 3/4. The number of people participating in the market in a percentage basis has skyrocketed. And there are no stockbrokers to talk to and to worry about calling you back to place an order. I mean, I remember when I used to go to the bathroom. I would go to the bathroom and come back a couple of minutes later, and my receptionist would say, or my secretary would say, "You had 4 calls." I go, "I was just in the bathroom for 3 minutes. I got 4 calls, and I've got to now make calls. And while I'm making the calls, I'm getting more calls. People were trying to talk to me about doing business, and I can only do one at a time." That is gone now. That world doesn't exist anymore. It's now you doing your own orders whenever you want to. Even if you're on the bathroom, you can make trades on the stock. This is a whole new world. There will not be a summer slowdown. No, that's gone. Those are gone. Those are gone. What is the bullish case for NSH again? When is the merger? We don't have a merger date. We know it's coming at any time. We're waiting for them to bring out their news. NavSite Holdings, these guys are Spire Global, and the word has it that Spire has already been touted as a $14 stock the minute they list on this merger already. There's all kinds of things happening on NavSite. NavSite is a information provider. They operate satellites in orbit. They handle operating satellites, data back and forth. This is an incredibly lucrative business. If you are any kind of a company with a server, you need someone to allow you to move your data around. How do you move data from one side of the country to another, from one side of the world to the other? in light speed, you do it through satellites. How do you do it without interference from the ground? You do it through satellites. Yes, this company is the satellite operator for data, and they are integral to literally every S&P 500 company out there. It's unbelievable how important these people are. Any thoughts on when we might see a price target announcement for 23andMe? Well, the company's been listed a week now. I'm giving it the first couple of months for the street to kind of, get a handle on all these new companies. There were 15 IPOs this week. So analysts are up to here covering new stocks, including the Spacs that have converted in. Only 2 have done SOFI write-ups so far. So I'm expecting dozens and dozens of analysts to do dozens and dozens of write-ups on dozens of stocks throughout the entire summer. So, it's coming. With the 5 million GameStop share offering, I'm just wondering what your thoughts are on the share price moving forwards after the squeeze. The more money they raise, Philip, at these prices, the stronger the company is financially. And the stronger the company is financially, the more buying will come into the market of the stock by investors who are going to buy and not resell for quite some time, causing a greater short squeeze scenario for those who are short. Correct. So this is a good thing. If this company were to issue another, say, 20-something million shares to get up to 100 million shares outstanding, and they issued these shares to bring in $7 billion, let's say, they'd have $9 billion in cash in the bank with 100 million shares outstanding total. That means that for every share that exists, there is $90 cash per share in existence. That's huge. That's huge. This company was trading at $4 a share not even a year and a bit ago. The entire company was worth $280 million in market cap. 280. They had a $220 million debt that they were carrying, a long-term loan. They had no equity. They had no value whatsoever. They pull off a stunt like this by issuing that kind of stock in the 300 range or whatever. That would be $90 a share cash per share on hand, plus a management team, plus the stores, plus the sales, plus the upside. It's $1,000 stock, man. You are on your way. Yes, you want them to keep raising cash. Puts them in a position to buy other assets and companies, and they could literally buy earnings. You buy private company earnings, merge them into a public company, and you trade at 50 to 100 times earnings. You can really build a company that way and dramatically. And this is what GameStop could be doing. I don't know if they're going to. I have no idea. The possibilities will become endless, and it's going to be really fun stuff. If a multi-trillion billion company were to buy SOFI, do shareholders get bought out for the decided price, or do the shares that get converted in, say, the big company? Well, that could go either way. Could go either way. You could have say Walmart wants to take over SOFI, and Walmart says we want to buy SOFI, but we're going to keep SOFI its own company, but we're gonna take it over, and what we'll do is we'll issue Walmart stock to the shareholders of SOFI on some kind of a ratio. And so if SOFI is sitting at 200 a share, and Walmart agrees to take them over at 400 a share, and the Walmart shares are at 200 a piece, then you get 2 Walmart for every 1 SOFI, and you just become a Walmart shareholder. You got 2 Walmart for every SOFI. You got $400 worth of Walmart stock. SOFI would still be a private, wholly owned subsidiary company of Walmart, and would still be doing what they do, but they wouldn't now be a separate publicly traded company. Now, if Amazon came along and said, "Oh no, we're interested in SOFI too. We'll pay $425 a share in cash for SOFI. We'll just pay you cash for $4.25 for every share you got. So all you shareholders, you take our offer, you get $4.25 in cash. And then the third company could be Google, and they could come along and say, "Oh, no. We're going to take. We'll offer. We'll take you on. We'll offer you $500 a share. We'll give you half in stock, half in cash." And now the management of SOFI have to consider all three offers and decide what to do. Tell the shareholders, what do you as a director, here's what we think. As directors, we like this deal, and this deal. But of the three, here's the one we would go with. Or we don't like any of these deals because we think, as owners of the company and who run it, we think we can make this company go to $1,000 a share, and we don't need to sell out now for $400 or $500. That could create a fourth offer, and that could be Apple. And Apple comes in and says, "We'll offer you $600 a share in cash." How about that? Who knows? Anything is doable. Anything can happen. But I've never seen anything like this happen with the big FANG stocks all trying to buy an entity. I've never seen that happen. There's a lot of spies out there who keep an eye on what everyone else is up to. So Apple knows what everyone else is thinking, and everyone else knows what Apple is thinking. And there are certain companies that do not make acquisitions of this kind and never will, because it's just not their style. And then there are others out there who will, come up from left field. I mean, you might get an offer from left field with maybe Wells Fargo. They come around and go, "We'd like to take you on. We'll make you part of the Wells Fargo family." And maybe that is the deal. Wide open. Absolutely no idea. But yes, anyway, there you go. If banks like Fargo, Bank of America are almost 400 billion companies with $40 share prices, what would justify SOFI at $18 to be a similar share price? Well, there aren't as many shares outstanding as SOFI as these other two. These other two have a much higher market cap value. SOFI has a much smaller market cap value. Right now, the market cap on SOFI is $17 billion. $17 billion. These others are $400 billion companies. See what I'm getting at? So, I mean, a year from now, SOFI could be trading at $100 a share as they are exponentially growing out with all these new customers they're hauling in, which they're stealing from other bankers. Let's not kid ourselves. The company could be an $85 billion stock. But it could well be that they're a takeover target for $200 billion or $300 billion or more on a paper deal. One never knows. Maybe 2 years from now, SOFI is $250 a share. And they get an offer for $350, and then they get an offer for $375, and then when someone else offers $400, someone else offers $500 a share. The bidding war is on. Who knows? It could happen between now and then. I don't know. An individual, nobody, how many shares can they own? Can they own where the company starts sending you stuff ultra seriously, listening to you, owning 5%, just curious? Okay, so if you're a large shareholder of a public company, do they treat you differently than they would, say, someone with only 100 shares of a public company? If you have, 4.99% of the stock and you still don't have to report to the SEC, you don't have to report your position. Maybe, maybe not. If you did own more than 5% of the company, they would welcome a phone call from you. They would welcome a text, a letter. They would welcome communication, because public companies love to talk to their shareholders when they can, when they're allowed to. But if a shareholder buys up a bunch of stock in a public company and they get to say 7%, the company would like to know, well, are you doing this because you're going to do a hostile takeover and fire all of us up here, those of us who are employees running this thing? Or are you a fan? Are you, what's your situation? Like, what's your position on how things are going here? Let us know. Can we be better? Can you help us be better? Would you be the kind of shareholder that could literally bring added value to our company, or are you a disruptor? I mean, what's the deal? And so, you would be treated differently. I would think so. Yeah. Ryan Cohen, he got through 5%. He got up to 10%, and then he met with Mr. Sherman and mentioned to him what he thought the company could be doing. And Sherman and the board reviewed that, and they agreed. They liked his game plan. They liked what he had in mind. They also recognized the fact that he was becoming a rather large shareholder, and so an arrangement was made to bring him in as a director with two other people who were Chewy people. Again, that right there, street cred, the Chewy street cred into GameStop. That's what Sherman saw. And of course, they cut a deal. I think that Ryan Cohen cut a deal saying, "I won't buy any more than 13%. I'll stop at 9 million shares, and I'll become a director, and I won't say anything. I'll just keep a low profile. You guys run the show until the annual meeting." But when the annual meeting comes, between now and then, we'll change out management because we're going to change the company's direction. We're going to go e-commerce. And we'll let go these, we'll let go these people. And Sherman also was, it was negotiated that he would go. But the good news for all the management of GameStop who were there at the time and who had been running it for a few years, they were all given enough of a parachute to leave comfortably. None of them were destitute and kicked out on the street with nothing. Cohen, of course, coming into GameStop helped dramatically move the stock. I mean, hey, and then of course the short squeeze and everything else. But here we are today, 6 months later. GameStop's a totally different company, totally different people running the show, totally different banking situation, totally different values, and the stock's at $217.50. So hello, future, and there you go. Yeah. Thank you, everybody, for that. If you'd like to talk to me about a 1 hour session, you want to get together with me, send me an email through my email address, which is right here. It's the old school hotmail.com email address. Send me an email. Say, Bruce, I'd like to talk to you on a one-on-one session. When can you book me in? I'd like to make a reservation and lock it in right away.